Hello viewers, in this video I'll be going over gold miners, ETF ticker symbol GDX. Today we are up 2.2% on the 1 hour chart. We are closely approaching the overbought RSI, and as for the MACD, we approached positive MACD. And for the 4 hour chart, we saw a convergence shaping on the 4 hour MACD, and there's a positive sign that there's a possible possible reversal, I should say. And at the moment, we made another support around the price of $26.25, where we found support that did as far as August 1st and even September 13, October 1st, October 16, November 11th, and back in November 25th. So we saw those support lines, and it's a good indication that this is a very, very strong support. If we do break, I should see sharp selling, even all the way straight down to the 200-day moving average. If we break this support, the bulls have lost confidence, and the next support will be the 200-day moving average. And that average also coincides with past support that dated back to June 24th at around the price of $25. And as for resistance, at the moment, we see the 50-day moving average acting as resistance as indicated back in October 8th, October 31st, and in November 20th. So the resistance is at $27.30. So if we were to move on higher, that price movement is roughly around 1.9% to the upside, and to the downside is roughly 6.6% to the downside. So the forecast model is now available in the link below, so do check it out for gold miners if we configure the settings, and you can review all the models that I have not reviewed, so do check it out. It's in the link below. So back to the forecast model, I'll go day by day where gold miners will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. So what we have here in the beginning of the trend, we start off touching the upper Bollinger Band. And after touching upper Bollinger Band, we see several instances where we touch the bottom Bollinger Band. So we have our first instance, our second instance, and then our third instance right towards the end. And we start to see a similar pattern shaping up on the trend in question. We see our first instance where we touch the bottom Bollinger Band, the second instance, and then the third instance right towards the end. And right in the beginning, we see it touch the upper Bollinger Band. So we have those points, and we have about 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the trend that we just examined was, I should say, September 6th to November 30th, 2017. Back then, gold miners was down roughly around 4.4%. So we may see continuation of downward pressure for gold, maybe possibly touching the 200-day moving average as indicated in the technical analysis. Again, this forecast model is now in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.